Monday, June 12th. Just got back from a week of R&R, so we didn't have any YouTubes last week, although I did one yesterday, Sunday. This is Monday, June 12th, market analysis. Stan Ehrlich, and I start with the S&P 500 and the stock market indexes always, and go into futures and sometimes sectors, forex, crypto, if need be, but always indexes for the overall market and the futures contracts. So we have a brand new signal today in futures. So a little catch up to review last week and what's going on today. The S&P 500 this morning opened a little higher and has managed to hold and rally a little bit more, but not yet. And I don't know if it's going to do it, get above yesterday, that's Friday, I meant, Friday's high, which is in an area of resistance. That's important because the DIA is the same in many respects, Q's the same in many respects, and the 2000, Russell 2000, the same in several respects. This morning's activity changes things a little bit, but definitely not changing the overall story, which is we are in a situation here where it looks like the markets are going to have another minor short-term downside correction, maybe similar to what we saw on May 24th, the low on a gap down into support. That could be very similar to what we're just about to have, I think. All four indexes, again, SPDR, DIA, QQQ, and the Russell 2000 have a small gap to close from a week and a half ago on Thursday to Friday, and that was on the June 1st through June 2nd, a gap to close. You can see it here with the little rectangle that I put in the gap area. We're up against resistance. One reason to expect a turn down of some degree. Secondly, we're overbought. Another reason to expect a turn down to some degree. On Friday, it closed around where it opened, barely higher on the day, and that's not particularly a good, strong sign. This morning, true, we're up 1.5 right now near the high of the day, but it could easily flip-flop and drop before the close. That's what I'm watching for. I haven't got any signals yet. I don't have any major reason to expect that I'm going to be right other than my background and experience. So I think we're about to have a downside correction, not starting yet. So what about the DIA? Very, very similar situation. The DIA is currently on the daily chart here, close to the high of the day, which did get slightly higher than Friday's high, but we are pushing against a major bear trend line, which happens to be the possible neckline on a head and shoulder bottom formation that I actually started talking about maybe even before May 25th, but definitely on May 25th and after. Now, this head and shoulder bottom, with the first shoulder being a very small double bottom by itself around the middle of December, and then the head of the formation is March 15th, and the last shoulder low was a couple of weeks ago, May 25th. This head and shoulder bottom is forming not in a typical location. Normally, it's the bottom of a bear move of some significance, especially when you're looking at several months like this, half a year or so. It's forming on the way up from a much larger bottom formation. So it's very unusual to have it form where it seems to be forming now. A dip to close a gap back down to approximately 332 would not be unexpected at all. I'm expecting it. Even a little bit further is possible without doing any damage here. So I'm looking for buy signals on a dip very soon, maybe starting between now and the close, certainly within the next day or two, without any significant further rally, if I'm right. The next move up after the dip, which is not going to change anything, I'm still very bullish, as I have been since October 13th, long term, for the rest of the year, if not more. So we get a dip or not, that's the question. And then the new high, I have to say, in particular with the DIA, after this dip I'm expecting, is going to be a very strong, big rally in a week or two or several days. I don't think it's going to take more than a couple of weeks, because it's a breakout of the neckline on the DIA. It's a new high for many more months and pushing above substantial major historical resistance. So again, the next rally up for the DIA and everything else will follow. The Spider and the Qs and the 2000 should all have very soon after this coming dip, I think I'm forecasting a really big strong rally. Now there's a chance that that could happen sooner, and I'm not going to get my dip. But so far, I have no reason to believe that that's not in the cards. Now, the Qs actually had a bearish engulfing last week on Wednesday. It didn't work. Remember, these reversals sometimes have multiples in a few, 2 or 3 or 4 weeks, and I call it clustering. And I've seen as many as 4 of them in a month period. 2, 3, a lot more common. This is a solo at the moment. Didn't work, but that doesn't mean the implication about topping out is not correct. It could very well be correct, and I think it's going to be correct. And I'm saying this when we are high and last and almost a new high ground for the complete rally. So it needs to stop immediately and start to turn back down immediately, and there should be no significant further bullish follow through. If there is, and there's new highs for the move here, it shouldn't go very far, and it should flip-flop back down again real quick. So either we're at it right now, the high, or about to be, if I'm right about it coming down and closing this gap around 334-ish. How about the QQQs? This commentary is almost identical. The Qs are right up here near the high. Wait a minute, I was talking about the Qs a second ago. I'm sorry, got them confused. The DIA is at the neckline stuff, that's right, and resistance areas and so on. The Qs are at the previous highs and immediate turn down. Remember, for the last many months, the Qs have been the strongest, the quickest, the best. Didn't have a downside correction that was quite as much, last as long, et cetera, as the other indexes. So they have had a hell of a good bull move on the QQQs, and the head and shoulder bottom that the triple Qs created, with the shoulder being June of 22 and October 13th of last year, and the last shoulder low, a little double bottom in itself, around January of this year. That pattern has already worked past tense. The minimum upside objective I talked about for months was 347. A couple of weeks ago, we reached and surpassed, now at 357, the minimum upside objective, and having some troubles in a resistance area, an old gap closure area, with a bearish engulfing. Didn't work, but nevertheless, it could be part of the topping out process. And right now, a super low risk potential new short position. Your stop should be, I don't know, very, very, very close, just above all these recent highs. Maybe you want to expand it a little bit more, but certainly not much. I'm looking at a point or two. All right, how about the 2000? Because that's necessary to complete the picture here. We also, in the Russell 2000 daily data chart, are up against resistance, a green resistance bar I drew here, level, and got overbought, as did some of the other indexes I didn't mention. They were also overbought, like the Qs, and started to turn down. In fact, today's low is the lowest in the previous 3 days. So it's the weakest, the fastest, the quickest. By the way, I have to point out that up 14 cents at the moment, 15 cents, 16, whatever, is almost creating a bearish engulfing new red short sale signal. If the 2000 closes lower than the Friday close, we already have a bearish, we already have an engulfing line. Higher high today than Friday, a lower low today than Friday, and the current quote is just barely higher by 12 cents a second ago. And again, it'll turn red if it gets below Friday's close, real time, a new sell signal. It has to close below Friday's low, below Friday's close, in order to stay a bearish signal. They sometimes can waffle back and forth during the day. What's important is how it ends up on the close for our ER3 signals. So this could be, I'm going to talk about it tomorrow, a brand new sell signal any moment. Only up 8. Before we finish, I might check it again. We want to see the red on the IWM symbol when I'm finished. Let's go to futures. Okay. As you know, the Spider is a futures contract as well as the E-mini. So the same commentary applies here as I just said a moment ago for the SPY. Great bull market. They always have minor downside corrections or intermediate corrections, less often. So I think we're about to see one. The next chart is the bonds. We have an outside down day, a bearish engulfing, but it's not overbought, so I don't have any sell signals. It does imply that we're going to see a little bit of a dip. There is a major support area around the 123 area. We didn't quite get down there. The last time we slipped a little, so there's nothing wrong with that. On a long-term basis, I'd love to see markets start to close above 134, 135, that is, to have a major long-term bullish breakout, and I do think it's going to happen in the next couple of months. But today's bearish engulfing at the moment appears to be causing minor problems, a little bit more of a dip, very plausible, but not damaging the long-term picture. What about the 10-year notes? Kind of the same story, but we don't have an engulfing. We just have a little bit lower on the day, a little minor dip, bearish, potentially, very mildly. There's support under the market. I fully expect it to hold. A bull trend line that hasn't been tested. On the bonds, we were sitting there just a few days ago on the bull trend line, and it bounced nicely. So I am looking for a long-term bullish move higher for the 10-year notes. Next chart, crude oil. Here come the energies. Looks like a new low close for weeks and a new low for the same. Looks like it's about to head south, break support area, and head into new low ground, and very, very bearish. Period. Been talking about this long-term bear market for quite a number of months. Next, same commentary for the heating oil. They're very similar. Resistance overhead has stopped rallies. Support has held a little bit occasionally and then has been broken. Pardon my cough. And the next major support at 2.14 is going to be a huge bear move breakout. And a big move down on that day, very, very likely, very soon, maybe this week. Next, natural gas. Same kind of comments. Bear market, bear trend, looking for lower lows. A recent sell signal is working very nicely. We're not at the moment oversold or overbought, so I don't see any reason for it not to break into new low ground, maybe this week. Next, we have precious metals, gold. So far, we've picked the low on this last bear move, and it is still the low for our green bullish engulfing. A little bit of a dip the last couple of days has not changed the longer term picture. I'm looking for it to start to rally again, but it's got little problems at the moment. Let's see what happens about upside or downside breakouts. Obviously, because of my buy signal, I favor the upside, and the longer term trend is up. We have higher highs over time and higher lows over time since October. And we did pick the bottom of that break. We did pick the top of that rally. We did pick the bottom of that break back here and this one back here. So it's got a pretty decent track record, but past performance is not indicative, et cetera, et cetera. You know that. Next, silver. We picked the bottom here. And wow, what a combination of technical factors. Double top formation, both highs, bearish engulfing, official ER sell signals. The formation produced a minimum downside objective that was fulfilled for a day and a fraction just a few weeks ago. And the low contains a green bullish ER buy signal. And Friday was the highest high since then and the highest close. So having a little bit of a dip today doesn't change a damn thing. I like what I see, looking for higher levels like in gold. Next is platinum. We've got a lower low in platinum than the last couple of weeks. Not following silver and gold very well or at all. No signals, just oversold bounce. We're getting close to oversold again, but this is a little bit more bearish. The longer term picture is still a higher highs and higher lows bull trend. So let's see if I can't get a buy signal out of this very soon and have all three precious metals work higher. But platinum is departing from the norm of silver and gold momentarily. Next chart, high grade copper, a little dip. The trend here is a bit of a different story. Since January's top, we've seen lower highs and lower lows. The last one got oversold, so a rally was expected. We got it. It bounced up to 3.8, which is a significant resistance area. It stopped last Friday and a day or two before, close to the same prices. And now we're seeing some weakness starting to come in. I think it's about ready to start to head toward the lows of May, 3.5, and maybe make lower lows. I think that's likely. Next chart, soybeans. Bounced off a support area very nicely in oversold conditions. Perfect combination. We had a little buy signal a few days ago last week that's working very, very nicely and produced a very good profit. And depending upon how you handle these signals, you may still be long. I wouldn't hold on much longer. Don't let a profitable trade get to a loss. Major mistake people make. Neophytes do this all the time. So our system has made a good decision about the buy signal, and past tense, good trade, depends upon how you trail your stop. Now, next chart is soybean oil. Overbought last Friday and today, starting to head down today, looking for a continued bear move, looking for a test of 45, and expecting to see lower lows. I'm bearish. The trend is down. Next, meal, soybean meal. Oversold, got a bounce. Not very much of one. Didn't even get back up to resistance very handily at all. and it's turned down on Friday and a little bit lower again today at the moment. I'm looking for a test of the lows and maybe another round of new lows into a more significant support area, which would be down around 368. Yeah, 369 is an excellent support area. I should draw a little rectangle in there, a trend line. I'll do that later. Next, we have a test of an old bear trend line at today's high in corn, and it stopped, pulled back significantly from the high, but it's still higher on the day by 11 cents. 616 hanging in there, getting close to overbought at a bear trend line. I think today's high is very significant, and it could start turning back down. Next, wheat. Bear trend to say the least, looking for lower lows. Don't think this bear trend is over by any means. Next, cattle had a great sell signal on top. We dropped for 2 days straight from last week's sell signal, and today we see a little bit of a bounce. No big deal. Looking for lower levels, possibly coming down to 164. That's the beginning of significant support. Got overbought and a bearish engulfing, my classic combination. Next, hogs got oversold, rallying nicely out of a very oversold condition, got down to about 11 or 12 on the RSI index, the lowest RSI reading in many, many months. Excuse me. And therefore, a pretty nice rally is not unexpected, and we're getting it. Doggone cough. So maybe a little bit more strength, but the trend is down. This oversold condition being so significant might have a longer term trend change effect, but I can't be sure of that at this point. I need to build a little bit more of a bottom formation than what we have so far. I expect the rally to stop and start to head back toward the lows to see if the bear trend can continue. I am looking for sell signals very soon. Next, OJ got overbought and then barely almost oversold. A couple days ago, it got down to 25.5 for the RSI, not quite low enough for me, but super close and bouncing a little bit. Obviously, the trend is up. I'm looking for a test of the highs of the rally. Next, cocoa today, brand new sell signal. Outside down day in overbought conditions, bearish engulfing sell signal, ER official red sell signal. I'm looking for a test of 2,987, give or take a little. It might start to try and bottom out around 3,050. We're currently 31.37 current quote, so I'm bearish, mildly at the moment. If the market cannot hold those support levels I just mentioned and starts dropping below those, I'll get a lot more bearish. But right now I'm short, and we'll see how far down it'll carry. Remember, this is still a bull trend and a bull market. It hasn't turned into a bear market yet, but this is the kind of thing that will change the long-term trend, maybe. A lot of my signals are the high day and low day. You guys have seen innumerable ones. Next is cotton. A little sideways boring here for a few months since October. Can't seem to get its rear end moving up or down for a trend. Very neutral, period. What can I say? I'm going to wait for signals. Sugar, the sweet, rallied out of an oversold condition. Trend is up. Looking for a test of the highs of the trend. Back up to 27-ish. Let's see what happens. Next, we're back to the E-mini. That's the end of the futures series of 21 markets. You have a great day. Talk to you tomorrow. Bye-bye.